I'm Andrea Berenfeld with Berkshire Hathaway Home Services Elite Properties. And this morning, we're talking to Drew Ferguson with Movement Mortgage. I think it's time that we get to the bottom of what's going on in this crazy market. And Drew is just the person to help us. Interest rates. Interest rates is all we are hearing about lately as it comes to, as it relates to real estate. So last year, interest rates were at record lows. And while now they're still low, we're starting to see them really creep up. So what is Movement Mortgage seeing in the market, in the economy, that's causing this outside the factors that are obvious to the layperson? Without predicting the future, are you able to advise us on what you believe may come?
Sure. So the last few years were obviously incredibly challenging with the pandemic for many, right? And we certainly need to be aware of that. But one of the blessings that came out of it were historically low mortgage rates, right? People took advantage of that. Likely the cheapest money we'll ever see lended. And to be honest, we probably got a little bit spoiled, right? We got a little bit spoiled the last 2.5 years with seeing a rate that started with a 2 on a 30-year fixed mortgage, right? That, to be honest, that's not a real life scenario, right? We're starting to see mortgage rates, to me, really kind of normalize for what a market should look like, right? Okay. So we're seeing rates kind of creep up, right? High 4s, around 5, somewhere in there. No one knows when this is actually going to stop. Personally, mortgage rates hate inflation. And we're at inflation of 8+% right now, year over year. So the longer inflation goes on, the more and more we'll see mortgage rates rise. That's why when you see the Fed talking about rate hikes consistently, they know that they have to get inflation under control. Right. And the only way to do that is by raising rates. Now, when we talk about maybe a prediction, don't have a crystal ball, so we'll see what happens on that. But to me, it's all cyclical, right? We've seen this happen over history where we've got to take care of inflation. We're going to rise rates rapidly. To me, as we rise rates rapidly, you slow the economy, which causes a recessionary time. And a recessionary time can be a scary word for people. It shouldn't. In housing outside of 2008, which we know was caused by the housing industry, housing has always performed well in recessions. It's always a great hedge against inflation. And the other thing that goes along with recessions is interest rates drop on mortgages, right? So the loans people are taking out right now, and what we're consulting with our clients with, is more than likely, these are loans that you're only going to be in for 12 or 24 months. If our predictions come true, right? If we follow, history is a great predictor of what should come, right? So if history predicts that if we go into a recession, we see mortgage rates drop always when we go into recessions, then this is not the time to be paying points to buy your interest rate down. This is not the time to be paying upfront mortgage insurance and spending significant money to do that. This is actually the time to be thinking about what is my lowest cost to get into this house through my loan. And so conversely, you actually should be thinking, how do I take a slightly higher interest rate to generate lender credit to pay all my closing costs, so that if I'm only in this loan for 12 or 24 months, I've already broke it even because all I've paid is my down payment. So if a refinance opportunity becomes available, you have not wasted your money up front, right? You are now in a position to not only capitalize on a lower interest rate, but also you're doing it with your money working for you and going longer for you.
That's great. I don't think that everybody thinks through, as we shouldn't. This isn't what we do, but we just get caught up in higher interest rates and what that's going to mean. But you're absolutely right. History is a great predictor, and that makes perfect sense. So thank you.
It all goes back to the strategy of the initial consultation, right? For Mark and I, it's all about educating the clients about, this is what we've seen in the past. If that happens, this is why we think this is a good option for you.
So I always say, you don't know what you don't know. And I know my first phone call is always to Drew so that he can better educate me on what's going on. And if you have any questions, that should be your first phone call as well.